Welcome to Crypto Macro Insights. I'm Maya, and today we're diving deep into Bitcoin's current market position. With me is Tom, our market analyst who's been tracking some fascinating developments. Tom, we're looking at August 20th, 2025, and Bitcoin just had quite a ride. What's your take on where we stand?
Thanks, Maya. You're right. It's been quite a journey. Bitcoin sits at around $113,000 right now, which might sound scary to some after we touched those 120K levels recently. But here's the thing. We're still up 17.6% over the last 6 months. Today, I want to walk through 3 key data sources: social media sentiment, macro indicators, and upcoming economic events to build a solid 4-week trading strategy.
Perfect setup. Let's start with what people are actually saying. What's the mood out there in the crypto communities?
The sentiment is fascinating right now. I'm seeing a lot of Bitcoin plummets to 113K headlines, which shows how spoiled we've gotten. People are genuinely nervous about a 5 to 10% correction. The discussions are split. Some are calling this a healthy pullback. Others are worried we're heading for deeper losses. What's interesting is the focus on altcoins underperforming Bitcoin again.
That's a great point about the psychology. Are people talking about any specific drivers or just general market fear?
There's definitely chatter about Trump's tariff policies and inflation concerns. People are connecting the dots between trade wars and potential economic slowdown. But here's what's bullish. There's still strong discussion around institutional adoption, especially MicroStrategy's leverage strategies. The community seems torn between short-term volatility fears and long-term institutional confidence.
Interesting mix of sentiment there. Now let's dig into the hard data. What are the macro indicators telling us?
The macro picture is really mixed, which explains the market uncertainty. Let's start with the Fed. They're holding rates steady at 4.33%, which is still quite restrictive. This means less liquidity in the system, which traditionally pressures risk assets like Bitcoin. However, here's the kicker. Real yields are actually declining. The 10-year Treasury inflation-protected securities yield dropped 4.4% over 6 months to 1.96%.
That's crucial for Bitcoin as an inflation hedge. What about the dollar? That's always a key factor.
Exactly. The dollar index has weakened 5.1% over 6 months to 120.76. This is actually quite supportive for Bitcoin, as we typically see inverse correlation there. Meanwhile, the VIX, our fear gauge, is sitting pretty low at 15, suggesting markets aren't expecting major volatility. But here's what worries me slightly. Credit spreads have widened 8.3%. That's the extra yield investors demand for corporate bonds over treasuries, and it suggests some risk aversion creeping in.
So we have supportive factors like dollar weakness and falling real yields, but some warning signs in credit markets. What about liquidity conditions?
Great question. The reverse repo facility, that's where banks park excess cash at the Fed, has dropped dramatically by 64.6% to just $22 billion. This means money is flowing back into the system, which is generally positive for risk assets. Money supply M2 is growing modestly at 2% to $22 trillion. So we're not seeing the massive monetary expansion of previous years, but it's still supportive.
Those liquidity flows are definitely worth watching. Now, looking ahead, what economic events should traders have on their radar over the next few weeks?
Actually, it's relatively quiet on the major event front, which could be good for Bitcoin. The main things to watch are the Chicago Fed indicators this week and several GDPNow updates coming through late August and early September. These give us real-time reads on economic growth. No major Fed speeches or policy decisions until September, which means less potential for surprise volatility from monetary policy shifts.
So a relatively calm calendar ahead. Let's get practical. How do we trade this setup over the next 4 weeks?
Given the mixed signals, I'm favoring a range trading approach as the base case. I see Bitcoin likely consolidating between $108,000 and $118,000. That's my 45% probability scenario. For range trading, I'd enter longs around the 108 to 112K zone with a 3% stop loss and target 8% gains toward 118K. Position size would be moderate at 40% of capital.
And what about the bull and bear scenarios? What would trigger those? Tom, this has been incredibly insightful. Before we wrap up, what's the one thing listeners should watch most closely in the coming weeks?
If I had to pick one thing, watch the dollar. It's been the key driver lately, and if it continues weakening below 120, that could really fuel the next Bitcoin leg up. Conversely, any sudden dollar strength above 125 would be my signal to turn much more cautious. The next 2 to 4 weeks will be crucial for direction.
Perfect summary. Thanks for breaking down this complex market environment, Tom. To our listeners, remember, this is not financial advice. Always do your own research and manage your risk carefully. We'll be back next week with fresh analysis. Until then, stay informed and trade safely.